there's a lot of important risk information that gets embedded into gold and silver prices. These seem to be the only commodities or asset classes that are really absorbing macroeconomic risk. Now, what's interesting here is that when we look at some of these other variables, when we look at the 10-year bond yield, which is yielding about 4.2% roughly, we look at the dollar index, which is down. The dollar index, this is a index of the dollar against a basket of other major currencies. So this shows you that the dollar is down. Inflation is still running north of the Fed's 2% target. And then we have these big headline risks that have been coming out. The administration is still trying to politicize the Fed. So certainly you have that. You have just general geopolitical risk, and anyone watching the news sees a lot of that. And I think gold and silver prices are the only places I can see that are kind of absorbing that. I really don't see equity prices at levels that would factor in these potential risks. I certainly don't see it in the 10-year bond yield. What's really interesting is whether gold and silver can continue to bear the weight of these different risks that we've talked about.